Hello viewers, welcome to my channel. I'm Hasham. So in this video I'm going to explain you about the introduction of Income Tax Act 1961. In examination, more than 50% of the question paper will be on theory. So if you are perfect on the provisions of income tax, then you can be easily able to attempt the problems also. So give more concentration on theoretical part also. So I'm making a short video on this introduction part of this income tax. So watch the video till the end so that you can be able to write in examination confidently about the theory. In this video, I'm going to explain you the meaning of the term tax. What are the characteristic features of tax? What are the objects of tax? What are the different types of tax? And classification of tax into direct tax and indirect tax, merits and demerits of direct tax, merits and demerits of indirect tax. So normally in the question paper, first question, you may get this introduction. So watch the video with full concentration. First of all, tax. A tax is a compulsory contribution made by the people of the country to the government, so that the government can be able to spend the money on the common welfare. So it is a compulsory contribution made by the people of the country to the government. The government requires huge funds, revenue, for conducting different types of activities like welfare activities, developmental activities, social activities. A number of activities the government has to perform. So without funds, the government cannot be able to perform its functions. So tax is one of the main source of revenue for the government, for the common expenditure to be incurred by the government. That is called tax. That's the meaning of tax. Now, characteristics of tax. What are the different features of tax? The first characteristic feature, it is imposed by government. Only government can impose tax. No other person can impose the tax. First characteristic. Second, in cash. Presently, the taxes will be paid only in cash. In ancient times, the taxes were paid in cash as well as in kind. But presently, the taxes will be paid only in terms of cash. Promoting welfare of the people. The main objective of imposing the tax, implementing the tax, is the common welfare of the people. The main objective of imposing the tax is the money which is collected by the government in the form of taxes will be spent on the promoting the welfare of the people. The next one, objective, raising revenue of the government. Because the government has to conduct a number of activities. Without funds, the government cannot be able to perform the different welfare activities, developmental activities, socio-economic activities, so many activities, administration activities. So many activities are there. The government requires funds. So the main source of revenue of the government is tax. Legal collection. The tax is not a voluntary collection. It's a legal collection because there's a law, Income Tax Act 1961. Apart from that, so many other taxes are there. So it is legally collected. When the government imposes the tax, it's a compulsorily the people have to pay the tax. There is a legal compulsion. Next one is element of sacrifice. Next characteristic feature is when tax is paid, there is some sort of sacrifice made by the people. Because when we spend some money on anything, we'll get something in return. For example, if I go to purchase some groceries, I'm making the payment and getting the groceries. So something in return I am getting directly, whereas a tax is such that we are not going to get direct benefit, we are going to get indirect benefit. Indirect benefit means when I pay the tax to government will not specifically give any benefit to me. The government will spend for the common benefit for all. So there is an element of sacrifice in the payment of tax, not a payment for specific service. When we pay the tax, we should not think the government will spend that money specifically on a particular purpose. No, the government is at liberty. The government will decide the tax money should be spent where. We cannot dictate the government that we are paying the tax, so spend the money on this way like that. Next is imposed on income, wealth or commodities. The taxes will be imposed on the income of the people, the wealth of the people, and the commodities and services which the people will consume. On these, taxes will be imposed. So these are the characteristics of tax. Next one is objective of tax. Why the tax is imposed? So we have two broad objectives: traditional objective, modern objective. Traditional objective, the government requires funds. The government requires funds for day-to-day expenditure. The government has to spend a lot of money on health, on education, on defense, on law and order, on justice. On all these things, the government will administer the country. For administration, for development, for welfare, the government requires funds. So that is the main purpose. The taxes are imposed. Apart from that, the government wants to bring socio-economic justice. That means if taxes are not applied, the rich will become richer, poor will remain always poorer. The gap between rich and poor will widen. To remove that, to reduce the gap between rich and poor, the government will impose the tax. So these are the traditional objectives. These are the traditional objectives why the government will impose the tax. Why the government will impose the tax. Now secondary, modern objectives are different. Presently the objective of the government is not simply to raise the fund for administration for welfare, but the government's main objective has increased. The objectives of the government has increased. The objective of the government is to accelerate the economic development of the country. For accelerating the economic development, we require funds. The government says we want the tax. With the help of tax, we can accelerate the economic development, reduce the unemployment situation of the country, reduce the imbalance, regional imbalances. Some areas are more developed, some areas are less developed. Regional imbalances are there. Similarly, for discouraging the consumption of dangerous goods. There are some goods which are harmful to the human being, like liquor is there, like cigarettes or tobacco is there. These are injurious to the health. The government wants to discourage the consumption. So government will impose heavy taxes on these items which are injurious to the health. So in this way, the government wants to increase and promote the exports. The government will make use of taxes in order to promote the exports. So these are the modern objectives why the government. Not simply to raise the revenue for administration, but to accelerate the economic development, to remove unemployment, to remove the poverty, to remove the regional imbalances, to promote the exports. So many objectives are there. Now, types of taxes. Taxes can be classified into different types, like first one, duty. The duty is the tax which is imposed on industrial production, export, import. When goods are produced in the country, as soon as the goods are produced on production, a duty will be imposed called excise duty. Similarly, when goods are imported or goods are exported, the import duty, export duty will be applied. So duty is the tax which is on industrial goods produced within the country or imported or exported. Secondly, cess. Cess is a special type of tax for a specific purpose. The tax which is imposed for a specific purpose, like education cess, health cess, etc. Next, surcharge. Surcharge is a tax on tax. Tax on tax. When the government is in need of huge fund on temporary short-term basis, the government requires huge fund for temporary purpose, the government will impose tax on tax. But this surcharge will be implemented, applied, imposed not on everyone, only on high income group people. Example, if an individual's total income exceeds 50 lakh and up to 1 crore, he is liable to pay surcharge at 10% of tax. 10% surcharge. If his income is from 50 lakh to 1 crore. If the income exceeds from 1 crore to 2 crore, from 1 crore to 2 crore, the surcharge rate will be 15%. 15%. If the income increases from 2 crore to 5 crore, 25%. 2 crore to 5 crore, if his total income, then 15%, 25%. Then if his income exceeds 5 crore, if an individual's income exceeds 5 crore in 1 year, then he will be imposed a surcharge of 37%. So different rates, 10%, 15%, 25%, 37%. The highest surcharge rate is 37% for those individuals whose income is more than 5 crore rupees. If an individual income is below 50 lakh, there is no surcharge at all. Below 50 lakh rupees is the total income during a particular previous year. That's it. The next one is octroi. Octroi means when the goods are moving from one place to another place. One place to another place. So here when goods are brought, for example, we have different states. Goods will move from one state to another state. So this octroi and terminal tax will be imposed by municipal authorities. Municipal taxes. When goods are entering from one state to another state, some octroi duty, it is called entry tax also. For example, we are living in a particular state X. In state X, and some goods are being brought from Y state to X state. So here in X state, they will impose octroi, entry tax. Similarly, terminal tax. When goods are moving from one state to another state, for example, goods are going out from X state to Y state. So when goods are going out, terminal tax will be applied by municipal authorities. Now, toll tax. The toll tax will be applied on the vehicular travelers. When the people go by buses, cars, trucks from one place to another place. So at the time of moving, at the time of using the road or using the bridge, they have to pay toll tax. So only for travelers traveling through car or bus or any other vehicle, they are using a particular road or particular bridge, they have to pay toll tax. These are the different types of taxes. Now, classification of tax into direct tax and indirect tax. In examination, normally question will be asked regarding differences between direct tax and indirect tax. Direct tax is a tax which is imposed on a particular person. He or she alone has to pay the tax. The tax burden cannot be shifted to any other person. So when a tax is imposed on a particular person, he or she alone has to pay. The burden will not be shared by any other person. That is called direct taxes. The example of direct taxes are income tax, wealth tax, and professional tax. Professional tax. So these are the example of direct tax. Indirect tax are the taxes which is imposed on the commodities, goods or services. Goods or services. So these indirect taxes will be paid by one person but borne by another person. Paid by one person but borne by another person. Example, sales tax is there. The sales tax, import duty, export duty, apart from that service tax or the taxes on goods and services. So these are the examples of indirect tax where it is paid by one person but borne by another person. Simple, you remember, sales tax is the best example of indirect tax. Now, merits and demerits of direct tax. Direct tax. So both the taxes will have the merits as well as demerits. We should not say always direct taxes are good, indirect taxes are not good. No, both the taxes have their own merits and demerits. In examination, you may be asked a question regarding merits and demerits. Now, merits of direct taxes. First one, economy. That means the expenditure incurred to collect the direct taxes are comparatively less. That means cost of collection. The government will spend less amount to collect the direct taxes. So from government point of view, these direct taxes are economical because the collection charges are less, whereas revenue from taxes are more. That is the first merit. Second, certainty. In this direct taxes, it is certain. The person who has to pay the direct taxes already know in advance how much tax he has to pay, what is the date of tax, what will happen if he has not paid the tax on time, how much is the penalty it will be imposed. So all these things are completely certain. So it is also one of the merit. Third one, elasticity. Elasticity means the government can regulate the taxes, regulate the direct taxes. If the government wants less revenue, the government will give more exemptions, deductions to the SSC so that his tax liability will get reduced. the tax liability will get reduced. Sometimes the government requires more funds. The government lift all the deductions and exemptions. That means the income of the people will increase, the tax liability will also increase. Then last one, equity. Taxes are not equally imposed on all the people. Ability to pay. If a person is having more ability to pay, he has to pay more tax. A person who is having very low income, he will pay less tax or no tax at all. So the tax will not be equally applied on all the people. Then convenience. The tax is paid conveniently because already in advance the assessee will know how much he has to pay the tax, when he has to pay the tax. There won't be any inconvenience on the part of the taxpayer. These are the merits. Now demerits. What are the disadvantages of this direct taxes? First one, unpopular. When we compare the popularity, the direct taxes are unpopular because only few people know about direct tax. There is a direct pinch of payment on the part of the taxpayer. When a tax is applied on Mr. X, he already knows that he is sacrificing some money, he is paying the tax. But very few people will come within the ambit of tax. A large portion of the people will be outside the ambit. So it's not popular. Only few people knows that there is a tax. There is a tax and he is paying the tax. Inconvenient. Direct taxes are inconvenient because in one lump sum he has to pay. The taxpayer has to pay the whole amount of tax at one time. So it will be inconvenient for the person. Then complex laws. One of the problem is the income tax law is a very complex law. Everybody, a layman, cannot be able to understand all the provisions of the law. Next one, different tax rate. We don't have a single tax rate. We have progressive tax rate. 10%, 20%, 30%. So different category of people will be applied different rates of tax. Next one, possibility of evasion. In case of direct taxes, there is more possibility of evasion of tax. Evasion of tax means not showing the income in order to reduce the tax liability. The people will not honestly show how much income they are earning. So unaccounted money, black money, possibility of black money is more. So in this way, there is tax evasion. These are the demerits. Now, what are the merits of indirect taxes? Indirect taxes are those taxes which are imposed on one person but paid by another person. Example of indirect taxes, sales tax. When I go to purchase suppose a television, a refrigerator, the cost of the refrigerator, let it be 25,000. The 25,000 rupees cost of refrigerator include the cost of production, the profit of the seller, and also the taxes included. So all these things are included. The taxes are included in the commodities or services which I am consuming, which everybody is consuming. So these indirect taxes are included in the price of the goods and services. So what are the merits? First, convenient. Because a person is not separately paying the tax is included in the price of goods. So he will not feel the pinch. So it will be convenient. Second, productivity. These indirect taxes are productive because the government can increase the rate for those commodities which are dangerous, which are harmful to the people, like cigarettes, like tobacco products, like liquor. The government will increase the rate of tax. Whereas other essential goods are there, basic goods are there, the government will not impose the tax, or if it is tax is there, very less rate of tax. The government will get more amount, more revenue. So if you compare the direct and indirect taxes are more productive in nature. Then minimum evasion. The tax evasion possibility is more in case of direct taxes, but in case of indirect taxes, evasion possibility is less because the tax amount is included in the price of the goods. Wide coverage. Because we consume so many goods, so many services, so for each and every good we are paying the tax. The coverage of tax is huge, the government will get more revenue. Demerits of indirect tax. Uncertainty. The taxes are not certain because it depends on the consumption. If the demand of the products are more, government will get more taxes. If the market demand has come down, then the government will get less revenue. So there is uncertainty about the collection of taxes. Violation of ability to pay principle. In taxation, one principle is there. The government should impose the tax according to ability of the person. If a person is having less ability, less tax. But in this case, indirect taxes, the government is applying taxes on all the goods, whether it is consumed by rich people or poor people. So there is a violation of that canon of principle of tax. What is the principle of tax? Ability to pay. Everybody have to pay the tax. The hit of taxes will not only on the head of the rich people but also on the poor people. Next is inflationary nature. Due to on account of taxation, there is a possibility of inflation. Inflation means increasing in the price of goods and services in the market. So there is a possibility of inflation if there are more taxes. High cost of collection. Compared to direct taxes, the cost of collection of these indirect taxes are more. The government has to spend a lot of money in order to raise the revenue from indirect tax. Absence of consciousness. The people, there is lack of civic consciousness in case of indirect tax, because people does not feel that they are paying the tax. They are thinking that they are paying only for the price of the goods. They are not feeling that in the price of the goods taxes are included. So these are the demerits of direct tax. So in this video I have explained you the meaning of the term tax, characteristics of tax, then the objectives of tax, types of tax, classification of taxes. In the next video I'll continue the main introduction part. So keep watching in order to get a good command on the theory of this Income Tax Act 1961.